Matt, are you here?
Yes, John, I am here.
Okay, Matt. Well, go ahead and get your PowerPoint up here. Just click on the green share screen button.
Okay.
Uh, Matt Hensley is a full-time trader with a background in both education and coaching. He is the head coach of Two Roads Trading, a live trading channel at youcantrade.com, and is the host of Beyond the Bell, a daily live market wrap show hosted on YCT's media outlets each trading day at the close. Well, sounds very interesting. Matt, where are you broadcasting from today?
I am broadcasting from just outside Chicago, John.
Tell me, are you the last person in Chicago who trades? As far as I can see, everybody who trades has moved to Florida.
Yeah, it sure feels that way sometimes. I'll tell you. Ever since they've closed the pits, a lot of the guys have gone to greener pastures, as it were.
Yeah, including big firms like Citadel.
hmm Yeah, a lot of prop firms actually are set up in Chicago now. Some of the bigger futures trading prop firms.
Interesting.
Mhm.
Well, I remember the old days on the pit. I used to bring guests down there, and they were terrified, absolutely terrified. I felt right at home.
But yeah, absolutely.
Okay. All right. Well, you know the drill. You have until 5 minutes before the hour, and then I'm going to launch into our first batch of prizes for the day. So I'm going to mute myself, and you have the floor.
All right, thank you very much, John, and a big thank you to John and his team, including Doug and Kate, who communicated with over the years. This is the fifth, I believe, event I've done for Matt Hedge Fund Trader. Always well organized, always a great audience too. Really, really looking forward to some of the questions that come up over the course of my talk. I will ask you guys. I'm not normally a save questions till the end, but I do have some material I want to make sure I get through because it was promised to you, and so I will try to save at least about 10 minutes for questions at the end. But again, I just want to give you guys the opportunity to. That's always been a personal pet peeve of mine when I attend an event and there's not time for questions because I'm a very inquisitive kind of guy. Also, a special shout out to I see Henrik and Dragon Trader. Those are a couple of mine. So we've all decided to come here today from the island of Misfit Toys. So I really appreciate the support from and any of my other crew that are there that haven't popped up yet. Guys, you've seen a lot of these disclaimers, and it's important that I show you this because they are important. So I really enjoy starting the day off. I think now in the last three Mad Hedge Fund events, I've kicked off day one, I've kicked off day two, and now I'm kicking off day three. So I'm sure you guys have received. I've been busy with my community the last couple of days, but I'm sure you guys have received a ton of great knowledge from the speakers. An absolute all-star lineup that John puts together each and every one of these events. So again, if you even if you miss some of these, he provides you with the recording. Or if you got to leave early to go trade here for this, I hope you stick around. But the recordings, of course, are made available to you. So guys, we're going to talk basically about using multiple chart types. And as I put up my bio slide here, I do want to just talk. The only thing on this bio slide I'm really going to cover is this, where it says "Hosted Beyond the Bell." That John alluded to that. That's a show I've done for I've many forms over many years. Currently, I'm doing that show for the Blue Sky Trading Company. They're one of my unofficial partners, and the team over there is absolutely fantastic. I encourage you to check them out. But Blue Sky Trading Company YouTube page, we go live Monday through Thursday at 4 o'clock Eastern. So right when the markets close, I launch the show. We stick around for about 20 to 30 minutes, have a lot of really fun activities. We break down the markets. We take questions. We do a lot of very fun things. So I encourage you to check that out. All right. So guys, what are we going to learn in this session? All right, we're going to talk briefly about how charts work. If you're not familiar with Renko charts, they're a fun little way to view the markets. I have one of the most important things I learned early on in trading is don't be too fixated or attached to one particular chart type. And I've probably played around with almost all of them over the years. Some I use more than others, some I don't use at all, and some I'm just kind of learning about. Some of the profile charts that I've been doing a deep dive on so far in calendar 2024 that I hope to implement into my trading by the end of the year. But we're going to talk about Renko charts. I'm going to talk a little bit about how I use a top-down approach to determine my intraday bias. As day traders, we should have an overall kind of a macro bias, a 1 to 2 to 3 day bias. We should also have an hour by hour and even 5-minute bias. And when those line up and we get a trade set up, that's when the high probabilities trades happen. I'm not this active day trader, guys, that goes through 40 or 50 trades a day. That's just not my overall methodology. I'm more in the really in about the 2 to 4 trades per day. I refer to myself jokingly and partially unjokingly as a excuse me, Tim. The site on YouTube is Blue Sky, BLUSKY, Blue Sky Trading Company. You'll see yesterday's show. I'll be live today at 4 o'clock. Yeah, no problem. But I'm 2 to 4 trades per day. I'm looking for 20 to 30 to 40 handles in the NQ, for example, or 12 to 15 in the ES. I was a long time gold and oil trader, and I got away from that post pandemic because the indexes were just screaming so much higher. I'm starting to integrate those back into my trading. It's a big thing in trading, guys. You should always, we're always looking for the same things every day, but you do have to adapt to what the markets are doing on a month-to-month, year-to-year basis. And boy, the NQ has just been such a trader since the COVID crash. It is not for the lighthearted, which is why I go to the ES or YM sometimes. But boy, that when the NQ spits out those signals, whew, the NQ has it's literally paid for my car and the rest of my house over the course of the last couple of years. So I'm always, as crazy as it is, and we refer kindly to the NQ in my community as a monkey on meth, but that's something that it's near and dear to my heart because of the success I've had trading it. I'm also going to tell you the 5 questions I ask myself before I make a trade. Now, obviously, it sounds kind of awkward. I'm sitting there evaluating a trade. Let me go through this. It's sort of built into me at this point, and it actually took a little time for me to kind of quantify these questions. But this list will hopefully, even if you're just, I know, I put day trading in my description, so a lot of you are here to learn a little more about that. Some of you are maybe day trading curious, as it were. Maybe you're a swing trader or a long-term investor, and you want to just learn a little bit more about day trading. Is it something that can supplement your income? Can you make a living off of doing that? The short answer to both those questions is yes, but it is like in any other, and I'm not going to be one of these. I do on YouTube, but I'm not a YouTube trader or one of these guys who's selling affiliates and stuff like that. I never disrespect anybody's hustle, but there's a lot of people out there that are just kind of doing a thing without form or structure. Day trading is extremely difficult, guys. It is extremely difficult. I've worked with some very talented people in engineering, doctors, lawyers, who have all told me when they've gotten good at this, boy, this is just as, if not harder, than anything I've done in my life. The only person who's told me definitively no that this was not the hardest thing he ever learned is one of the best brain surgeons in Chicago. So I'm going to take his word for it that that brain surgery is just slightly harder than what we do here. But I'm going to give you the 5 questions that I asked myself before a trade. And guys, I'm going to talk about the importance of community and trading. Community is something that's obviously built deep into our DNAs. Going back thousands of years, a bunch of let's say I don't know all of my evolutionary biology, but let's say tens of thousands of years ago, individuals not as evolved and advanced as us sitting around fires and being a part of a community. And in the tech age, obviously, there's parts of that community that have gone online, and I have built something that I think is very unique in our space. And at the end of the talk today, I'm going to tell you about that. So, guys, let's just get a little bit into Renko charts. But before I do this, I just told you like what we're going to cover. What am I going to be teaching you during this event? But guys, what am I really teaching you, right? Like if we were to just boil this down to a single word, methodology, right? In any trading, in long-term investing, maybe swing trading, day trading, you have to have some type of methodology to your overall trading, right? Maybe if you're a long-term investor, maybe you're a value investor, maybe you're a growth investor. As a swing trader, maybe you're a 1 to 3 day small cap swing trader, or you're a multi-week large cap swing trader. Maybe I've dabbled in option swing trading over the years, both directional options trading, selling credit, all those types of things. In the previous stop in my trading education journey that John told you about under the You Can Trade banner, I was an option swing trading coach, and that's where I got into futures because I met a lot of people over in the TradeStation community that were very big in that. And then a couple of years ago is when I launched Teresius Trading. And the best part, guys, don't let anyone entrepreneurship, launching your own company, very very difficult. I'm sure John will tell you that. But one of the best parts of it, guys, is I get to assign myself a fancy title like head of trading education, right? Like I put that on a business card. People are like, ooh, I wonder who gave him that title. It was this guy. It was me. So I'm due for a promotion, I think, in the next couple of months. So we'll see. I don't know. Yeah, I don't know what's above that, but I don't. We'll see. Stay tuned, right? But what are Renko charts, guys? So a Renko chart is a type of chart developed by the Japanese, like a lot of our charts were. It's built using price movement rather than just price and standardized time intervals. So, like if you put up a 5-minute candlestick chart, which I'm going to pull up momentarily, every candlestick is exactly 5 minutes, right? No matter how many price changes happen within that, maybe speaking from the ES, maybe a candlestick is 25 handles long. Maybe it's a 5 handles long. Maybe it's 2 ticks long, right? Handle being, 5,000, 5,001, 5,002. The ticks, of course, being each individual tick in between those. And no matter how much price movement there is or isn't within a given amount of time, in this case, 5 minutes, the candlestick forms in 5 minutes, closes on to the next one. 5 minutes, closes on to the next one. Renko charts are not necessarily like that. And when I first started looking into Renko charts a couple years ago at the advice of a friend, I honestly didn't find them all that helpful. But what I began to do then is integrate those with the candlestick knowledge that I already have and some of the technical analysis tools that I already use. And that really began to open up some of what I do in terms of NQ. Renko charts can be used in you got to find the right brick size, but they can be used on any particular asset. Some people use them a lot differently than I use them. I'm going to get that into that in a little bit. But this is basically a very zoomed in chart, a very zoomed in look at what a Renko chart looks like. They're composed of bricks that are created at 45-degree angles to each other. Consecutive bricks do not occur beside each other. So whereas, and I'm going to pull up a live chart here in a minute, just so we'll watch for 1 or 2 minutes together, just so you can kind of see the bricks forming and then unforming and locking in and all that good stuff. But essentially, if the price doesn't move, the chart doesn't move. I just described candlestick charts. Even if there's little to no price movement within the time period of that chart, 1 minute, 5 minute, 15-minute, hour, 4-hour, whatever, it's the chart moves from left to right at the pace at which you set it. That is not always the case in Renko charts. And especially once you start playing around with the block size, you can set a block size of 100 in the NQ, and one chart on your page will cover months or weeks or even longer, right? Set it for 100 in the ES and you probably see back a few years, right? So the time axis is, it's the same. It's usually on the bottom, but it's not constant, right? There may be, just looking at this chart here, this green move up may be 5 minutes, maybe an hour. Okay. And same for this, that's why you got to pay very close attention to this. A brick can be any price size. This is the box size. You can, there's a traditional box size. There's an ATR based box size. I always stay with traditional. I use ATR. I love ATR, but I use it in a lot of other ways. Again, they have a time axis, but the time scale is not fixed. One of the strengths of Renkos is when it comes to trend. Okay. And some people use them like I use them, and I'll outline in a minute. Some people use them the exact opposite. They can filter out a lot of the noise and they can just show you a nice, clean trend. Now, this can be beneficial in some ways, and it can be detrimental in some ways, which is why, actually, as I'm sitting here telling you about Renko charts, I don't advise using them by themselves, right? I use Renkos. There's basically 2 ways to use Renkos, and I'm going to just show you what this looks like backing out a little bit. So I use Renkos as my primary chart type for trading the NQ, and then I have candlestick backup. I'm going to show you some examples of that in just a moment. Others use Renkos as trend strength confirmation by using it on longer time frames. In fact, I personally know a couple of swing traders that use Renkos in stocks to determine longer term strength of trend, right? So there's your primary chart type. This is, again, part of my methodology. I have a primary chart type and a backup chart type, right? So for most of my trading, the candlesticks are my primary. A 5-minute candlestick pattern is my primary. Usually I use VWAP as one of my major tools, ATR, a lot of other things like that we obviously don't have time to get into in a 50-minute talk today. And then my backup is usually actually a longer term candlestick chart, which I'll show you momentarily. Okay, so 5-minute and then a 4-hour candlestick chart. When it comes to my NQ Renko trading, I use usually a 3-minute Renko chart because I want a little more movement. I want a little more. I can screen out some of the movement using my backup chart, which is a 5-minute candlestick. Okay. Now, sure, I have my bias that I'll talk about and we'll get into momentarily. But what I'm essentially doing is my trading methodology is to have the simple patterns, right? There's a lot of people out there, and this is not right nor wrong. You know, the old saying, there's a million ways to make money in the markets. They're all just hard to find and even harder to master, right? That will look at something like again, a 5-minute candlestick chart to determine entries, and then an hour or 2 hour. Actually, somebody swears to me an 18-minute Renko chart is. I haven't tested that yet. Is something that they use. And that's okay. Again, whatever methodology you use. But my trading methodology is to have simple patterns that play out on either candlestick or Renko charts that play out maybe 20, 25 times a day. So, Matt, how do you get from 25 trade ideas and screen them down to the 2 or 4? That's when some of my other trading methodology comes in. That's where I'll look at the 4-hour candlestick chart of whatever I'm trading on the Renkos, or the 5-minute candlestick chart of whatever I'm trading on the Renkos. I'll look at things like the ADD, the advanced decline difference on the NYSE. I'll look at the VIX. I'll look at, I will use a little bit of dome trading. I'm not heavy into that. And I'm just kind of leaning into some market profile stuff. So this is all in conjunction. You form your thesis and then you trade off of that thesis. Okay. So I want to watch for just a second, guys. I think I should have this up in the background here. So this is kind of how I set up and I was actually really, really excited because I was sitting here about an hour ago, just kind of fuming quietly that the NQ was not moving like it usually does, at least a little bit before the open, right? So here's our Renkos, and I want to zoom in quite a bit. So I have this Renko set up on a 5-minute chart. Okay, in about 40 seconds here, because it's about to close this 5-minute bar, you're going to see these lighter. See, these are sort of transparent blocks here are going to what I call lock in or paint, whatever term you want to use. So we've got these locked in blocks here. These move up and down accordingly. And in about 5 seconds, you're going to see this lock in as well. So there you go. All right. So these have now darkened, and now the price movement for the next 5 minutes may continue along down here, may move up here, but the price will not lock in until the end of that 5-minute. Okay, so it gets a lot of the intra-bar noise out, right? So look at this particular candlestick right here. Basically, not technically a doji, but basically right at VWAP, right? Which to me, VWAP is a little bit less useful of a tool before the 9:30 New York Open, but still a tool that I use pretty religiously. And so a lot of noise here, right? There's a high, there's a low. We basically traded this candlestick with very little direction, very little decision making. It was just kind of there. And the Renkos, of course, can filter a lot of that out. You can see there's been a slow but steady trend up since basically about 7:35 Central this morning. So about 8 over the course of the past hour or so. So you can see what looks a little choppy here, okay, is actually on the Renkos, on the 5-minute Renkos, a nice, slow, steady move up. Okay, so that's just one example. I want to look at a couple examples here now. Let's pull my slides back up. Okay, so I have about 6 patterns that I trade on the Renkos, right? 3 patterns, long and short of each. So 3 setups, 6 patterns. Okay, and so one of them is a very simple kind of what I call a modified cup and handle pattern. Most of you are all familiar with the good old fashioned cup and handle, right? Whether you're talking about, I know a lot of that got popularized in swing trading stocks, right? But this is something that plays out on a lot of different types of charts, especially candlesticks and Renkos. And so we kind of have our cup handle movement here, right? So at this point, in theory, right, I'm excited about this trade. All right, this is one of my setups. Nice, breakthrough of the pattern, right? And so we're heading up in theory. But then I come over to my candlestick chart, and what looks like a nice, clean trend up, I see as a lot of indecision. Okay. Most of you that have studied candlesticks, hopefully, if you studied candlesticks, you learned a lot from Steve Neeson, one of the NISON, one of the OGs of the candlestick world. Can't recommend his stuff enough. If you can get any of his DVDs secondhand, his books, anything like that, just a fantastic teacher of trading. I've seen about all this stuff, but when he talks about buying and selling tails, wicks, shadows, whatever you want to refer to them, when we see a lot of these in multiple directions over the course of even a slow, steady trend up, this shows me this looks like a strong, uninterrupted trend up. And then we come over here and we realize, okay, is it a trend up? Yeah, it is, but it's a little more of a drift up, a bleed up, right? Used to be kind of pre-COVID that when the markets didn't have a lot of news or didn't have a lot of activity, maybe the larger traders, some of the big boys with their trillions of dollars in the markets weren't really participating much. The markets just kind of stayed where they were, or we bled down a little bit, or just a nice drift down. Post-COVID, that's changed, right? Seems like when the big money participants are not necessarily in there or not heavy in there, the markets just sort of do this drift, this bleed up, right? Not that you can't trade that, but I'm a momentum trader, intraday momentum trader. I want to see strong movement, and I want to see a strong momentum. And sure enough, this would have been a nice little green trade for a couple of minutes before moving well past where my stop would be. I just can't sit here, guys. I'm pretty incapable of taking large losses because I took so many of them when my career started. I very rarely will sit here and let a trade hit 4-figure losses for me, right? And I'm not, I'd love to tell you I'm some trader who makes $10,000 trades or has $250,000 months. I hope to be someday, but I'm just sort of working there. And in the meantime, getting the nice, especially getting a nice $1,200 to $1,500 winner to start the day is that's very nice, right? And then if I can get a couple of those and just sort of make sure I don't give too much away the rest of the day, that's another part of my trading methodology, right? It's part of knowing who you are as a trader and knowing what your strengths and weaknesses is. Taking losses is actually a strength of mine. I don't get affected if trades are losers for me, right? Like, especially if they're immediate losers. If I take a trade, it's my setup, okay, and it goes against me, all right, I get out, and it really does not affect me that much. What affects me is letting trades that are, let's say, plus 900, plus 1100, plus 1500 turn into losers, and I don't do that. Right. That affects me very greatly. Or when I have a day, maybe I'm up $2,500, $3,000, something like that. And then I have a couple bad trades to end the day. And what was a $2,500 day is now all of a sudden only a plus $600 day or something along those lines. Thankfully, it doesn't happen often, but I know when something like that happens, it's going to affect me the next day. Well, Matt, how do you know that? First of all, I've been doing this long enough to kind of, know my strengths and weaknesses as a trader. And also because I spent about my first 4 years of my career journaling like every single thing. One of my mentors, when I first got started, she told me, it's better to collect too much data than not enough. So of course I would journal my trades, entries, exit, trading setup, all this kind of stuff. But I also journaled caffeine intake, right? I don't really drink much during the week, but if I would have, go out and have a couple of cocktails on a Wednesday night, how did I trade Thursday morning, right? And there was not inherently an edge in a lot of that data, unfortunately, because I collected a lot of it. But I did learn in days where I took drawdowns to end the day that usually the next couple of trades the next day were not as solid as setups. They were not quite as comfortable as I'd like them to be, simply because I was basically revenge trading, right? All right, I want to make sure I get through my slides. So let me move on here. So here's another example, guys. This was Tuesday of this week, just a couple of days ago. You remember we had this big move up and then subsequent move down in the indexes, right? So this is more of a structure trade, as I like to call them. It's not necessarily as defined a playbook. I don't teach stuff like this because I like to teach my defined playbooks because they're easier for my clients and students to understand. But this is just a basic structure trade, right? Like we have a strong move up that kind of came out of nowhere, not a ton of news, behind it. And so as as I mean, I tend to be a trend follower instead of a contrarian, but when something like this happens and we have basically, what was this? Basically a 100-point push in about 20-25 minutes, and I don't see any news behind it, the little contrarian pops up on my right shoulder and says, "Hey man, let's look for a place to fade this," right? And sure, sometimes you got to keep a tight stop when you're being a contrarian and when you're trading a little bit against the trend. But as you can see here, as we broke below this prior low here, that's where I was going to start looking for a potential short. And when we come over here, see, it was at the 720 level, so this is right about here. Sure enough, this was right when this large candle, again, this is not technically a bearish engulfing candle because it's not engulfing the candle before it, but look at how it engulfs the price action of several of these candles at combination of two multi-wick rejection, as I call it, two selling tails up here, a nice strong downward candle on, again, sort of going against a trend that happened without a whole lot of news, breaking below this structure here. Boom. That was a pretty nice trade. All right. So again, this is where I found a trade on the Renkos, and it was backed up by the structure on the candlesticks. Here's another one that was just absolutely beautiful, guys, right? So this is the pattern that I showed you before, just a very simple, what I call RTT pattern, Renko trend trade. All right. So as I'm here, now here's the candles where this showed up. So the first thing I'm going to look at is where's VWAP. We're above VWAP. All right. Again, breaking out of this structure here. So breaking out of this the supply zone here and moving higher with a lot of room. I got to have at least and Q trade to pump up to the +1 standard deviation band off of VWAP, right? Now, if there was a candle here, guys, so the entry point was basically right about there on the trade, but let's say there was a candle here that looked more like this. Maybe it had tested the +1 standard deviation and reject it. And let's say maybe there was another candle here. Or a candle wick here. So we have a twice rejection of this 620, 625 level. At that point, the trade would have been a no-go. Okay, I would not green light that trade. But because we were breaking out above structure and we had not tested this +1 standard dev band yet, especially after breaking through a what I call a confirmed breakout above VWAP, which is there's two confirmed breakouts above VWAP for me. There's a test, retrace, and go, or one of my all-time favorite patterns, break, retest, and go, right? Just the very basic tenets of technical analysis, guys. We teach the very basics not only because they're the foundation on which we build everything else, but we teach the very basics because, guys, sometimes that's all you need. Right? Like, I'm not saying that's all you need to make a living in trading, but on a given day, all you need may be a very, again, previous resistance becomes support. Previous support becomes resistance. Resistance, we break through. So we assume that this is support until it breaks down, right? So again, these are just the little things that I think one of my strengths as a day trader is that I became a successful swing trader first. The prop firms, there's a lot of companies out there that are whether they call themselves prop firms, they're more like funded trader firms for retail, right? Like you can go sign up with them. The Blue Sky Trading Company that I do some work with is one of those. And I'm not going to, I like I said, the team over there is great, but I'm not specifically recommending them. But I am going to tell you, if you ever go into that world, stay specifically away from the companies that are live sim, right? So you pass an evaluation and then they put you in yet another sim account. And so when you request a payout, they're paying you out of pocket. The biggest companies are mostly these live sims, and they have a lot of complaints because they have these very arbitrary rules about withdrawing money because the money has to come out of their pocket. Whereas a few of these, and actually Blue Sky is one of them, that eventually puts you into a live brokerage account if you prove through the evaluation period that you can trade. When you request a withdrawal, it's money coming out of the account that it's not out of their pocket, right? They gave you an account, you built the account, now you're withdrawing money from it. So I'm not going to get deep into that today, guys, but always ask these firms, hey, what is your path to a live brokerage account? Some of the biggest ones, they don't have one, or they'll give you some arbitrary answer about, oh, well, if you meet a certain set of criteria, and then they won't tell you what the criteria are. Make sure there's a nice clear path and defined objectives to get you to a live brokerage account. Okay. I know big a deal to some of the people in here. I know John's group usually is a pretty high net worth, so you guys may not need that if you want to eventually get into day trading futures. But you know, again, just a nice little nugget of knowledge there, because a lot of people go down the road and they spend money with some of these companies and they get denied payouts and they're pretty pissed off, and it's a whole thing. So just try to avoid that. Make sure you go with prop firms that have and funded trader companies that have a path to a live brokerage account. All right. All right. So we reviewed this, guys. I want to get to the very core of my trading methodology. And guys, it's always risk reward, right? Risk reward and growing your account. And this is something, unfortunately, I don't see a lot of day trading coaches, gurus, whatever you want to call us, that teach this kind of stuff, right? Like one of the reasons I like VWAP is because, especially when you build the standard deviations off there. I don't have a huge background in probabilities or statistics, but I took enough business courses. I know what that means. And so having a basic, if you're going to ever get into VWAP trading, guys, have a basic understanding of the bell curve, probability, statistics, all that kind of stuff. I don't mean you need a PhD in it, but take a few hours, maybe Investopedia, maybe there's something on YouTube, and just kind of, doesn't even have to be trading related. Just kind of learn what standard deviations mean, right? Obviously, if you're in options trading, you probably understand that already. All right. So one of the things, guys, that for me is in my entire trading methodology, keep in mind, I know, especially in the futures world, guys, I'm not ignorant to the world that I'm speaking to you from. So many people have these, promised 3-to-1, 4-to-1 risk reward, and in my experience, that's just not very, very realistic. Okay, but think about it for a second. Okay, if you're an ES trader, all right, a 10 handle stop loss in the ES, pretty good size, right? Like you can work with that, and it's going to give the trade enough room to breathe, unless it's an FOMC day or something like that. So think about 1.5 to run, and I say reward to risk for this table because I don't want people to get confused. So let's say you're risking 10 handles to make 15. If that's your trading setup, you only need to be right 40%. 4 out of 10 trades need to hit for you to be break even, not including commissions, things like that, right? I tend to live right in this world right here, right? 1.5 to 1 to 1.8 to 1. Okay, and I keep my winning percentage, at least as a futures trader overall. It's a little higher this year, but I tend to keep it above 57%. So if I'm 1.5 to 1 and my winning percentage is 57%, account go up. That's the easiest way I can explain it. Like, you want to give me sticks and I'll draw on a cave, like those community people I was talking about at the beginning, right? Like, 1.5 to 1, 57%, account go up. That's basically it, right? And I know it's not the sexiest thing in the world, right? When somebody's not blowing up these huge numbers. I don't post stuff on social media, guys, at least when it comes to P&L, just because that's not the people that respond to that are not the type of people I just, to be brutally honest with you, that I enjoy working with. Trading is hard work. Day trading is extremely hard work. Now, it doesn't mean good education. Coughing off myself, as humble as I am, that can't really reduce your learning curve. And don't get me wrong, I have met people that have made some money fairly early in their day trading futures career. But in general, it's going to take you 1 to 2 years to even get comfortable at this, guys, right? And I don't shy away from telling people that, which is good, because then the people that expect to make $1 million in 6 months don't join my community. Excuse me, don't join my community, right? And again, those are the people that get very frustrated after a few months. And I was that person when I started too. So I don't want to think like I'm speaking pejoratively of a certain group of people. I was that people, okay? So I understand that mentality, and I understand some of that. So it's something that I really try to preach when I do events like this, where not all of you, most of you probably have, this is the first time you've heard me speak. And if you're thinking about getting into the day trading world, I just want you to take nothing else away from this talk. It's, you got to do the work. In any trading, you got to do the work. Okay. Yeah, there's fantastic education out there, fantastic groups and newsletters like John's that really can help you with your learning curve, can give you some great ideas into what you're doing and how to go about it, and even some great trade ideas from time to time, which is fantastic. We can all make some money together. But at the core, if you want to trade for a living, okay, which is predominantly the people that I work with, I've asked the question of my clients over the years, if you got good enough at trading, would you quit your job? It's like, is that your ultimate goal? All but one have answered yes. And that one is a really good gentleman who's a college professor and just loves working with his students. So I'll give him a pass on that. Okay. But again, this is where the money is made. And honestly, guys, it's the same thing in any type of trading. When you get your risk reward, when you get your break even percentage together and your winning percentage, right? That's where you really begin to see accounts grow. That's where you really begin to, in all honesty, make a living trading, right? Like I did pretty well as a swing trader for a few years. As a day trader, it has quite literally been life changing for me to get good at this. But guys, do not let anyone tell you it's easy. Do not let any trading at its core. Okay, especially the style of day trading that I use is simple. It's not, it never has been, never will be easy. Okay, so I just, before I get into talking about some of this other stuff, before I get into talking about my community, I want everyone to make sure you understand that right out of the gate. All right, this is one of the harder things you will endeavor to do in your life, but son of a gun if it ain't the most rewarding, right? Outside of some personal things, actually I just got engaged very recently. Outside of really cool family things like that, this is one of the hardest but most rewarding things that I've ever done. So on to the next one. I want to get into my market thesis definitions, and we're going to take I think I have enough time to take a very brief look at. I'm just going to pull all these up so you can read them, so I won't go through them here. Whoops, there we go. So I go, full bull, only long trades, bullish. That's kind of how I say it, because we hear so much in the financial media, somebody's bullish or bearish on this. I kind of say it bullish, bearish, right? So this is where my overall thesis is going to be. And again, this is one of the ways I take those 20 to 25 trade ideas per day, and this screens out about half of them, right? And then it's using other methods that I already talked about that screens me down to that. I used to say 3 to 5, but honestly, this year it's been more 2 to 4 because I've been fortunate enough to catch a decent amount of bigger winners this year, and I've increased my position size a little bit this year. I trade usually about 3 to 4 minis as opposed to the either 2 minis or 25 micros that I used to do. But mini trading is very dangerous. Micro trading is still dangerous, but less so. If you don't know the difference, basically 10 micros equals 1 mini of the of the indexes. Or not most things have micros now. Not all of them, I don't think, but most of the major tradable future assets have micros. If you're going to start into this, guys, start with micros. Great position size for somebody to start with is 2 to 3 micro contracts. The position can go heavy against you. You're not going to be out more than a few $100. Yes, it limits the upside as well, but it's a great place to get your feet wet and start to understand how quickly you can make and lose money in the futures market. Okay, so I'm going to very briefly, we're going to take this off again. I'm going to pull up my 4-hour chart. There it is. All right. So you can see, guys, I try to, whereas my 5-minute candlestick chart, see, it's not doing much right now. I have a lot of different indicators. I've got VWAP. I've got some of them turned off, but I've got candlestick definitions. Sometimes I'll put leg and base candles up here in our 7 indicators. This chart can get kind of busy, right? My 4-hour, I don't have moving averages. I don't have, well, obviously you're not going to, well, you can't have VWAP on a 4-hour chart, but I don't. I don't put a lot of this kind of stuff out there, right? I'm just sitting here. I just want to look at the structure. I just want to look at them. When each one of these candles takes 4 hours to put together, you've got a lot of very, a lot of very good information put on this chart. You've got millions of trades, trillions of dollars in some cases. And so, you don't necessarily, so I don't need as many of those indicators on this chart. And guys, this is a very, so what is my bias right now? My bias right now is bullish. Okay, bullish. I wouldn't call it full bull because, again, we're at new all-time highs, right? Which in theory should make me fully bullish, but we're quite literally in uncharted territory, right? So there's I don't know where the overhead resistance is or where it's going to form, so I do have to be slightly cautious. But I remain bullish as long. Let me pull up as long as we stay above 19,000. I'm going to be full bull or bullish. Okay, we dip below 19, I'll go back neutral. Anything in this zone, if we break below the top of this zone, I'd probably actually be slightly bearish on just the intraday, not my overall thesis, to the midpoint of this zone and then back to the bottom of this zone. Would not shock me, guys, if we actually have to go retest 19 at some point. Again, break, retest, and go. But early on right now, it looks like we want to break out above 19,100. I don't typically trade in the first 15 minutes, guys. Usually I let the markets just kind of dictate their what they're doing. I also need to see an ATR on a 5-minute ATR of the NQ above 15 for me to initiate any trades, just because that's again where I need to be to see the movement that I want to see. All right. Okay, we went through all this. So, guys, when do I make a trade? All right. Well, the misconception about making a future trade is I think the market's going to go up, I'm buying, or I think the market's going to go down, I'm shorting. Okay. And in theory, that's correct. But my next question is then just why? Why do you think the market's going to go up? What's your structure? Where are you putting your entry? Where's your stop loss? Where's your first profit target? Where's your second profit target? All of these types of things, right? So when do I make a trade, guys? Two things. A, when I have a setup. No setup, no trade. End of story. Guys, there was that big run up yesterday. Okay. I got a part of that, but I missed a large chunk of that. Why? Because one of my setups didn't fire off. Okay. The best discipline in trading is watching anything, well, in this case, the indexes, go the direction you think they're going to go. You're sitting there waiting for one of your setups and it just doesn't come and the market just goes. That happens. Welcome to trading, right? Also, getting stopped out of a trade that turns around and runs and would have been, a $2,000 winner. Welcome to trading. Okay. Especially day trading futures, especially day trading futures in the NQ. All right. Welcome to trading. So I have to have a setup and my market conditions, like I just outlined the condition with the ATR, have to fire off. Okay. So there's 5 questions to ask yourself before you enter a trade. Now, I highly encourage you to screenshot this when they're all up, handwrite them down, type them, and print them out under your own format, right? I come from a whole family of educators. My mom just retired for the 3rd time from teaching after 41, 42 years. And my dad was a college administrator for many years. So I've heard everything on education. And when I put together a course, or I always will sit down, I'll go over for dinner. I'll talk to them about some of the stuff that I'm putting together in the order. I was, okay, how about they don't know anything about trading, but hey, make sure you define this core concept here, move into here, right? And so handwriting something and then typing it, you're processing that twice. Okay. So more likely to stick. So the 5 questions to ask yourself, guys, before you get into a trade: what setup am I trading? Okay. So just give you some examples. RTT long, RTT short, Renko head and shoulders. I talked about the modified cup and handle, VWAP tap long, VWAP tap short, +1 standard deviation rejection, +1 standard deviation hold, -1 standard deviation rejection, -1 standard deviation hold, right? These are all, if I can't define that, it's not a trade. Okay. If I'm looking at something and I think it's going to go up, okay, that's great, Matt. What's your setup? Well, I don't have a setup. Well, then you're not trading. But I know it's going to go up. That's my inner dialogue, right? If you've ever seen Lord of the Rings, I get into some of those, Smeagol Gollum back and forths on trades sometimes. But again, if I don't see a setup, I don't care how sure I am the markets are going to go where they're going to go. I don't take a trade. Sometimes that's very frustrating, but it's discipline. It's what you have to succeed long-term in any trading endeavor, investing, swing trading, or day trading. All right. So what setup am I trading? Does the meet my trading methodology? So I talked about, 1.5 to 1, 1.8 to 1. So if I'm trading the NQ, okay, and for example, let's say I want to risk 20 handles to make 30. I'm probably not going to set my stop that low, but it works within my methodology, right? If I'm saying, okay, I got to have a 20-point stop loss and I don't see any significant support on the chart for 40 points below, and the ATR is let's say 40. So in potential, we could go there in 5 minutes, right? I'm probably not going to take that trade because the risk reward is just not there, right? There's opportunity for reward, but the risk is too great. Okay. One of the guys at Blue Sky that is kind of my liaison over there, and we talk trading quite a bit, just kind of, off the board, off the record, but he likes to say, we are not in the trading business. As traders, we are in the risk management business, and that's true across the board, no matter what style of trading you're doing. They've done study after study on this. I know some of the legitimate, large prop firms, the in-person prop firms, have done studies on this, where the people that come in risk reward, the people that especially in understanding of trading psychology, will do better in the learning process than those that are just there to YOLO, right? So does the risk reward meet my trading methodology? Are market conditions right for this trade, right? Things like the ADD, the VIX, all the little market internals that I look at. Am I over trading? Am I revenge trading? That's something I need to ask, right? I just told you that I've caught myself revenge trading after days where either they're losing days, thankfully don't come a ton anymore, but still happen. Everybody's got losing days. Or after a $3,000 plus $3,000 day ends up down like a plus $1,000 day. I'm going to go try and get that money back in the morning. So I have to be sure that my head is right before I make a trade. And the most important question, guys, am I ready to lose on this trade? Okay. Those that can take losses and not let them affect them, and or at least not let them affect the next trade and their decision making in the next trade, and don't panic and bail out of trades at tiny losses. In futures trades, got to breathe. I know people that say, oh, I set a three handle stop loss in the NQ, and I said, if a market maker sneezes, the NQ moves 20 points and you want to set your stop at 3, really? All right, good luck with that. I'll say the same thing to anybody out there saying that. I'll say the same thing to you. I say to those people, show me that it works. Don't show me a trade or two. Show me a year's worth of trades to show me that that's profitable. I was born in Wisconsin. My whole family, both sides of my family are from Missouri, though. It's a show me state. You got to show me, right? So am I ready to lose on this trade? All right, guys, to kind of wrap up here in the next few minutes, as you go through the process, if you're somebody who's started to become a day trader, or you are a day trader and you're struggling for some consistency, or maybe you do all right, you just want some more trading ideas, I want you to, any kind of education has to come in 3 areas. This was something, so after I left the You Can Trade brand, I had as most people do, I had a 90-day no compete, and I was able to sit down and really ask myself, okay, Matt, you're a pretty profitable trader. You do pretty well. Really, though, how did you become that? And so I listed all the reasons that, and the things that happened to me, the things I learned that made me a profitable trader. And I found they all fit into one of these 3 groups. Strategies goes without saying. You got to have strategies that have a definable edge, right? I also put trading psychology in the strategies, because not only do you have the strategies, you have to have the mental and emotional and psychological ability to trade those strategies as they're designed. Okay. Mentorship. I was fortunate to have a couple of very strong mentors in my career. Okay. Somebody who's been where I am, or in your case, you need somebody who's been where you are now. Okay. And will help you stay, the big A word, guys, accountable. Okay. Accountability in trading. Because guys, we're in an environment now, right? Like, and I'm not going to get into, politics or anything like that, but we're in an environment now, like in society in general, where people do not often hold themselves accountable. People will not often admit where they're people that have trouble admitting when they're wrong make horrible traders. Actually, I hope for as many people like that in the market as possible, because I'm going to be there to take their money, right? Like it's okay to look at, that's a tough part of trading. If you have a losing trade and you followed your system and you followed your stop loss, the trade just didn't work. I consider that a good trade. Okay. Not every bad trade loses you money. Not every good trade makes you money. Okay. But sticking with your methodology, sticking with your setups, and sticking with your stop losses makes you a good trader. And that'll keep you in the game long enough until you figure out what you're doing to make consistent money. And the last, and guys, honestly, I think the most important part is community. I don't have time to tell the whole story, because it's actually about a 20-minute story. But I'll just tell you, early in my career, I stumbled into a mentorship program that ended up actually not being a mentorship program. I flat out donated $5,000 to this gentleman, who shall remain nameless. But I was eager to learn. I came in and again, I'll spare you all the details of that, because anybody who's learned from the retail side without an institutional background has probably experienced something like this at one point or the other. When you first get into the business, you have no discernment. You have no idea. The person promising you millions of dollars is probably not as good as they say they are. The FTC is starting to take some of these guys down, and I'm all for it. Completely here for that. But community, guys, out of this little mentorship group, I actually formed a strong connection and a friendship with 6 other people that had gone through that. It started as commiserating about the money we had just paid for this for the program that was not at all what we were told. But you know what we said? Why don't we meet individually? Okay, or as a group? Why don't we, and so, one of us got a Zoom subscription or whatever this was about 2016, 2017. So I don't remember what tech we were using at the time, just some basic meeting room. And we met twice a week for 2.5 years. And that group, more than anything, I love my mentors, but more than my mentors, more than anything else, made me the trader that I am today, because they were people that held me accountable. We had a rule. Anytime you made a trade, and we were all swing traders at the time, you had to report it to the group. Okay. And so you could have people say, you know what, Matt, this looks like you're chasing, dude. Like you're a chaser. I was a chaser. Hi, I'm Matt. I'm a reformed chaser. Right. And you're kind of chasing here, dude. This is what we talk about. You got to be careful with this. And it was then taking trades that, like, oh, I really want this trade, but I think it's chasing. I got to go report it to the group. I don't, again, this was the process that I went through. And so I learned how important a community, a group of similar style traders to bounce ideas off of and seek out support when you need it. And that big A word as well, accountability. people to hold me accountable when I did dumb stuff. Okay. Which, as a young trader, a newer trader, doing dumb stuff is what you do. Right. So that was, again, the process that I went through with that. So guys, as I'm wrapping up here for the 4 minutes that I have left, okay, I want to talk the group that I can't even say that I built, right? This is a group that I facilitated and helped build. So back in December, I reached out to about 12, well, I think it was 12, longtime clients, people that had actually followed me from one place to another, and a couple of newer ones, right? And Chris, my brick size for the NQ, believe it or not, is 1. Okay, it's very, very small because I like to see a lot of movement. So 1. Yeah, I know it is. It is. But I use it again. I use it as my primary chart and then candlesticks for backup. If you're using Renko as a backup, I would recommend in the NQ setting at least a 5, probably a 10 handle. Again, not 1 tick, 1 handle. So like for ticks, it'd be 4. 1 handle, 1 point, whatever you want to call it. But anyway, so I started the company that hosts my website just acquired a community service. So there's 3 types of communities online, right? There's the chat, right? That's Discord. Think Discord. Okay, Discord was a great tool for traders, especially day traders, for a long time. Every single Discord I've been in, even my own, has about a 2-year shelf life before it goes dormant or it goes crazy, right? And you just get people that you do not want in there. So there's the chat. There's the old-fashioned post and reply, like a bulletin board. Somebody posts something and people reply to it. Okay. And then there's the Zoom, right? The Zoom rooms, very much like what we're in now, where there's video sharing, audio sharing, all this kind of stuff. The Elite Circle, this is the group that I helped put together, has all 3. Okay. And has them for different things. So let me show you if you hop in with the Elite Circle, let me show you what your day looks like. We start the day with the morning market briefing, 3 to 5 minute video that's usually up an hour before the markets, talking about my thesis and talking about the structure of the markets and what I'm going to look for. Just all we look at is the 4-hour chart. Okay. Then every day at noon, we have a strategy session where I'm going to review my trades from the morning. If anyone else is willing, they can review their trades. People can ask questions about them. And then we build a thesis and a battle plan for the afternoon, right? Like, hey, we're looking for what's one thing we've talked about a lot over the course of the past little bit here has been the big market moves in the afternoon, right? Twice weekly office hours open Q&A, right? So I just show up, I turn on my cam, I turn on my screen share, I turn on my mic. People come in just like college professors when they'd have office hours. That's what we do. It's the most valuable thing I offer, guys. You have a chance to come in and see somebody who's been doing this for a living for about the past 7.5 years and just ask questions, right? We also have a market talk channel, and I intentionally ask people, unless you have a question or a post, and we can talk a little bit in there or go back and forth, but I want to keep it very clean so it doesn't turn into a Discord server where people are spamming crap all the time, right? We also have special events and webinars. We have something I like to call cocktails and candlesticks, right? Where in the evening everybody brings a cocktail and we talk trading. Or tea. Some people prefer tea. And then you also get 50% off all my courses. My first full-length strategy course releases a week from Monday. So if you join in with the Elite Circle, you'll have access to that at 50% off and any one-on-one sessions as well. And guys, we are launching our own app. The iOS has been approved. The Google takes a little longer. I hope to have that app up and running by the end of June. So all the alerts, all that kind of stuff will come through the app. It will be a dedicated Torissi's trading app. I'm very excited about it. I don't want to take you in the community because I value my clients' privacy. So everybody posts names to things. So I don't want to I promise people privacy in there, so I'm not going to show this here. But this is what it looks like. We have a market talk channel, charts, weekly goals, etc. And then this is our meetups page where all of our meetups, our strategy sessions, our office hours, all the strategy sessions are recorded. Office hours are not, because I want people to be able to hop on the mic and speak freely. All right. So guys, as I wrap up today, I'd ask you to come join the Elite Circle. Okay. And if you join today, you're going to get full access to the Elite Circle community. You're going to get my 25 rules of day trading course. I usually sell this for $197. You're going to get my trading as a business course. Learn how to build your trading business plan. That's usually a $500 thing, right? And guys, it's $97 a month, right? I never begrudge any traders out there selling, mentorship programs for a lot of money. I'm sure some are here this week. That's great. Probably great value there. But I want something people can come to month. I don't want people to have to worry about a $300-$400 monthly bill. Again, you get my courses are usually priced between $900 and $1,000. So you get 50% off. Like this course next week, you'll be able to get it for half off. So Kate has just put my offer in the chat there. Again, this is including number 2 and number 3 is not something I typically do. Usually people gotta come in and buy those. But because I'm always appreciative of John inviting me to speak to these events, I wanted to put together something a little special for you guys. So if you're interested in day trading, come check us out for a month. If you are a day trader and you're struggling to see consistency, come check us out for a month. If you're seeing some consistency, but you just want some more trade ideas and you want a nice little calm community of traders to help, you can post your journal in there and people can give you feedback, including me. I try to comment on a lot of different things in there. Sometimes I get a little behind, but I catch up. Questions. I'm a big goal person, so you can post your weekly goals in there. And again, it just never gets too busy. It's designed to be something you check into 3-4 times a day, not something you have to have up on your screen or you'll miss something, right? It's a nice place for people to come beginning of the day, middle of the day, end of the day, and talk about their trading. So guys, I hope that I'll see you in there over the course of, I hope you join. I hope you're there for a very long time. It's designed to be about a 6 to 8 month overall program. I have people that have been there that long. I've just started opening this up to everybody, guys. So in fact, this is the first time outside of my mailing list I'm promoting this because I wanted it to just take about 4 to 5 months and kind of simmer. And I wanted those individuals who came on board at the beginning to help shape the community. And they have, and they've done a fantastic job. So come join us, guys. You can't beat the price. Honestly, you can't. This is one of the best communities out there, I believe, in the futures community that will help you become your own trader, which is what we're trying to do. All right. So guys, thank you very much for your attention. I'm sorry I don't have any time for questions, but I did put my email up there. It's just matt@tyreseastrading.com. Feel free to email me if you have any questions. With that, John, thank you very much for having me. Kate and the team, thank you very much for your communication. You guys are always great. I'm going to shut up and get off the stage now. So have a great rest of your day. Enjoy the rest of the speakers, guys.